Hello and welcome to another update video about MATIC. MATIC continues to grind its way through this correction. I think we've been following it quite well here. Also, it broke below that neckline of the potential head and shoulders pattern here, so that's broken. Yeah. So, I don't normally mention head and shoulders because we've got all the context through Elliott wave. But I already mentioned yesterday that, hey, we've got a potential head and shoulders here that's in line with the Elliott wave count, which projects still further downside in this C wave, okay, to the downside. What we're watching here is the C wave currently unfolding in the yellow scenario in wave 2. Price is now quite deep in the support area. Well, sort of halfway through, still plenty of space. As you probably may remember from previous updates, the 58-cent level is sort of really the last level where my view is that the context is starting to shift. So below that level, I think it is going to be much more risky from a probability point of view because to trade on the long side, because below the 78.6 FIB level, if we get only a sustained break below that level, things are likely changing on this chart, and this setup is going to break most likely. But it's starting to get interesting now because we're now getting into the interesting areas of this support area where I think when someone is scaling in, it may be reasonable to add larger positions now, whereas up here those were tiny. Positions here get a little larger, and then there has to be, at least the stop has to be below that level because that's invalidation. Below the 78.6 FIB, yeah, you can use the stop there, but the risk is that it might just do a wick down and we go. So the 1-2 setup is invalidated below the beginning of the wave 1, okay, and that is typically where a stop has to sit. But that's up to you how you deal with that. I'm not telling you what to do, just saying what a reasonable way to scale in would be. Now then I have to say that's personal because taking the heat, scaling into a dip, that's not for everybody, right? Some people like to wait for confirmed trend reversals, okay? Some people like to trade breakouts. Some people like to scale into the first larger dip, like I do, and then still keep money available for the turnaround, okay? For a confirmed low. Obviously, it's still important, I think, to keep it light, to keep it small because it's catching the falling knife. But we know that cryptos can turn around at an instant, and the reward to risk ratio here is quite favorable. So again, I'm not controlling the markets. I cannot tell you that, okay, support levels have to be respected or they have to hold. But I think so far it's gone really well. The thing is though, all I can tell you is when the market is changing. So I cannot tell you, okay, this support is holding or whatever. But this is a setup that gives us very clear parameters, and it's pretty much gone according to plan. We've had our 5 waves up, and we now have our 3 waves down in an A, B, C structure. That C wave should still go a little lower, most likely. And in the C wave, I can count 5 waves, okay? And the target for the C wave is, so there are different ways of calculating targets here, but one way is to take the length of the A wave, and then we get the length of the C wave, and that's pointing towards 64.9 cents. That's the so-called A equals C target, where wave A and C have the same length. And that's, again, 64.9 cents. Just above that, we've got the golden ratio. It's the 61.8 retracement level. So there's a cluster of support there. And the wave count itself shows that here, wave 5 might be in the making now of wave C. So that's sort of what I'm watching. We could also use the length of waves 1 and 3, add it to the top of the wave 4, and see if we get another target. A 61.8 extension is typically common. That's at 68.9 cents. So I would pay some attention to that, but it doesn't look finished yet. But yeah, that's sort of what I'm watching. I mean, basically we're now in the region where it can turn around at any time. The thing is, what would be a first signal for reversal? First signal would be a break now above the wave 4 high, and that's here at 80.7 cents. That swing high that formed on Sunday. A break above it would be a first signal. Better signal would be a break out of this trend channel to the upside. Just wondering, sometimes we can add these trend lines in corrective price channels. We can do that once we have a top in wave B. and we add it to the low of the A wave, and it can give us an additional potential point where the correction might finish. So I feel quite good about this, because even if we drop further, we might test that trend channel's lower boundary line and then go. So it's just something in addition. Now I can be wrong about the micro count here. It could be that this is still wave 3, right? That's technically possible. So I'm just saying either we get an extended 5th or we are still in the 3rd. Still, to me, seems more that we find support in this region around 66.7, maybe 65 cents, maybe a little lower when it hits here the lower boundary line of the trend channel. What wouldn't be a good sign is a break to the downside of the trend channel. But I would be watching this area here. Okay, that's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.